Welcome back. We got some very interesting news today as it pertains to Palantir and the government business, and I think it warrants a full breakdown. So, the breaking news is that the government's testing essentially an exit hatch from Palantir. What does that really mean? I'll get right into it and give you my thoughts because this is potentially a narrative that could impact the stock going forward, that could sort of drive a lot of concern, and for good reason as well. So, basically, the DoD is testing Microsoft and OpenAI and other models that could be used instead of, partnerships with Palantir, Gotham, or Foundry. And they're basically trying to lower any sort of vendor lock-in risk and strengthen bargaining leverage so they're not overpaying Palantir or anyone else. And so Palantir, the stock at least, did react to this pretty substantially as the headline came out, down about 4% before recovering. It's still at all-time highs, of course. The information, the publication called The Information, pretty reputable. They released a story at noon, and the stock fell below $158 before coming back in. So I'm going to break it down because I do think this is a fair concern, but there's a little more to it than just the headline. So what exactly is being tested? Well, we have a lot of these new AI tools now that are going to be used to generate code to transfer to more open formats so that there aren't any real lock-in effects that are causing government to overspend, which I think largely is a good thing. And as for basically positioning the DoD to migrate to other stacks if they so wanted. But so far, it's super early stage and it's totally confined to a sandbox testing environment, and there's no production use of it just yet. They just announced that they will be testing it. Palantir's government footprint is still expanding. Maven, NATO contracts, AIP for government even in Q1 that we saw. So expansion and this sort of pressure can and probably will coexist. And the DoD likes to often hedge bets. So I think it's largely to be expected. So it's certainly not a rip and replace situation where Palantir is going to get ripped out at all. And I'm going to explain why I don't think it is necessarily a problem. So here's why the lock-in matters to the thesis. So I think this is what is getting impacted here, right? Is that Palantir's moat, we're just talking about the government business now. I prefer the commercial business, but the government business certainly is intertwined and drives a lot of the value, and still roughly half of the revenue, right? So the moat being deep integrations and switching friction, switching costs, however you want to say it. So being able to convert, with the power of LLMs, the data to do any migrations, that sort of puts the pricing power at risk. Now the question is, that's great. Is there a better option to switch to? And so this will be something that I'm sure that's up for debate, and investors will be concerned about going forward now that this is sort of brought to the forefront. We can expect maybe tougher recompetes on any contracts that are expiring, and the government gross margin might get impacted as Palantir accelerates spend. But these are all sort of taking it sort of as far as you can, right? Because I sort of do have a different view. Granted, the market cap, 400 billion roughly, almost at this point. Now a top 20 US company, trading super high on a multiple basis, as we know. Talked about this yesterday. And the consensus assumes we're going to get at least 20% compound annual growth on government and, of course, rapid AIP monetization. So that's the backdrop in terms of the valuation. Again, I think Palantir has all of the levers and the tools at its disposal to handle this, and they're even better equipped to do it now that they are a company that has such a high valuation, right? You could say the valuation's a risk. I think it's almost an advantage. They can spend to pretty much solve any problem now. So here are the scenarios that I think about. Base case is where we currently are. I think we look out to next year, probably base case target a little under $200 if you're talking base case. And as for the government CAGR remains untouched, multiple, we'll just leave that there. If you're putting this on and a 5-year multiple or something further out. That's the price target you get. As for a bear case, and let's say migration starts and Palantir does start to lose some of these contracts, which I think is fairly unlikely. Let's say the CAGR, at the very least, Palantir stops growing and the growth gets impaired and the multiple would be lower as a result. And so that's where you see a $100 stock price. What if Palantir is able to adapt? I don't think this is necessarily a bull case situation. Potentially you could say the government actually learns that Palantir's technology is far superior than these other solutions, which I think is true, and that maybe they decide to spend more even. I think that's less likely of a case. I think diversification for vendors is usually a good thing, and Palantir's advanced so significantly in all areas of the government that I think it would be great if we're just able to maintain our current level of growth and less so, pushing and pushing for more. But I know they'll continue to do that. So basically the matrix here is the bear case, somewhere on the order of this might be worth $50 per share on a long-term horizon. And I think it's fairly limited. It's not super likely that would end up happening in terms of an impact. So basically, what are we trying to watch here? Because we need to figure out when is this going to come into play. So the budgeting situation, if there are any cuts there, or language around open standards, or specifically these new contracts with Microsoft perhaps, or OpenAI, or even Anthropic's Claude, I believe got a contract, or maybe it was Grok. Elon Musk's Grok may have gotten a government contract. And so anything about portability being required, and I'd love to hear, it's probably too late to submit questions on this, but I'd imagine the analysts are going to ask about it on the earnings call, which is on August 4th. I did my earnings call video yesterday for a preview if you want to watch that. And basically, we'll just have to see about what the ARR for government's looking like, the churn, and if the gross margin gets impacted. But I think it's great to see the stock did not react to the downside, right? Let me just check it right now on my phone here to see if it, no, it looks like it finished very strong. We had the intraday drop and the stock recovered. So even at the elevated valuation heading into earnings, looks like the market's not too concerned, meaning it's a sort of a long-term, more of a longer-term or medium-term risk, not something that's going to crush the financials today or this year even. So for evaluating the risk, I think if we see any of these tools and these tests graduate to more production use cases that could cause churn, I think that's sort of, again, not imminent, but something we want to watch for, see how investors are reacting to it. And if there's any sort of congressional push for open mandates. But Palantir, again, their technology works with anything, right? That's their whole thing, is that you can integrate Palantir really into any organization or any data stream. So I think there's overreaction there. But any sort of political backlash is something to be aware of in terms of reputational concerns. We know Palantir is impacted politically quite a bit. Maybe the Democrats are upset with work with ICE and IRS. I did a video on this a couple months ago. As for tailwinds, I think commercial businesses could just plow right through any concerns here, as well as if NATO and defense backlog picks up. So the takeaways are really that the government churn I view as pretty low probability, but it is high impact. We saw how government growth slowing impacted the stock in 2022. Now it's a different business now with commercial AIP and AI in general. But I think this could introduce some extra volatility around earnings, and we'll have to see and focus on pricing power retention, which Palantir historically has been great at, and not just revenue beats, and see what's happening longer term. It's not a non-event. I think it is something sort of for the first time we're hearing about this, but I think it is telling how the stock reacted, or for that matter, didn't react. Makes me hopeful about what's actually going to transpire.